Alrighty, traders, it is Thursday, August 8th, 2024. Let's get into the markets. Let's get into our portfolio, talk about what's going right, what's being worked on. Good bounces in the markets here, so really nice recovery and a pretty interesting hammer candle really forming on the weekly. We're going to certainly see what happens tomorrow, but you got a green hammer candle there. So let's get into it. So we're going to cover markets, get into some charts today. We're going to look at the portfolio, see where we are, and then we're going to look at the actual portfolio, what's in it right now and how it's working, give you a sense of the plan of what we're doing. And have been having like meetings with the members every single day, really great discussions with people out there. So really good stuff, great feedback from the group. Yeah, we've all taken a little bit of losses earlier this week. Some recovery going on, but I think it was a fantastic learning opportunity for everybody, including myself. So we all learn, we all evolve, and really, really great stuff from people. So let's get into it and see what's going on. Let me share my screens and let's just jump into, and I'll get off video. Let's take a look at what the markets did today. So a pretty big up day on SPX today, up 120 points for the most part. So here on ES, 126 points. Just looking at this rebound, you had just fairly decent selling day on Friday, came back to the support area, broke to 50, okay? Had the Sunday night low, Monday morning low, recovery, pretty nice hammer candle, no follow through at all on Tuesday. Not a very good looking candle here, although this inverted hammer, not necessarily the worst sign either. Just trying to hang in here. And then we did touch briefly oversold territory. And then today, pretty nice follow through move to the upside. So nice recovery overall. And if we look at how the week is going, not only did we hold this support level that we had identified sometime back that I covered with you guys. So, this was a previous resistance level flipped to support. Okay, we've tried to break it this week. Didn't do that so far. Week is not over. And now we've got a nice green hammer candle here. Now, what does this mean? It means absolutely nothing, but what it could mean down the road is if we get a close above the body here, maybe by the end of next week, and then I'd like to see maybe one more candle above, then simply we had a pullback to the 21, higher high, pullback to the 21, okay? And then maybe we're off to another higher high, or maybe this will turn into something else. Who knows? I'm not in a game of predicting. I'm just using what the probabilities are telling me to best play the market moves. All right, so there's where we are on ES. Now, a couple things on ES that I brought up to the members is looking at the weekly. Yeah, we've got some MACD, RSI heading lower, squeeze, but the daily, nice little reversal candle today. But one day does not make a trend, so I'm not really worried about it unless tomorrow is equally. Maybe you don't need a giant up day, but at least we don't want to erase all of today's gains, and we just want to continue to see the technicals starting to continue to improve. Let's put it that way. But we have a nice setup for a strangle here. We're sitting right at the 21, right in between. Bands are opening up a bit here, so I'm still a little gun shy, a little hesitant on the market, and with volatility up where it is here, I think you got to be a little cautious, but we are going to get back into some trades. I'll talk more about that. On the VIX, gigantic spike this week, but that was really all contained in a one-day spike, and then just 3 days of chilling out on the VIX as it calms itself back down. So VIX already down now to 23.79, so normalizing fairly quickly. Doesn't mean it can't go worse, but right now, most of the volatility spike that we saw has been largely erased, and we're back into the low 20s. I think sticking around this area between maybe, I'm going to say 18 to 24 would be really perfect for us, and especially if we get a little bit of a grind down in the market. and a volatility between 18.24 or 18 and 25, something along those lines. Just enough to give us really good premium, number one. Number two, not giving us too much of a spike to make things difficult. And then getting the grind down that we want to help take advantage of the traps that we have on the 112s and the 111s. So there's where we are on that. The XV/XY trade, it's still in play, in my opinion. I think selling naked puts down below here is still not a bad strategy. What I wanted to see was some indication that, we weren't going to go down and retest. I think let's see what happens tomorrow. If you get a little bit of a bounce in VIX, fine, and this thing, rallies, but I still think it's an interesting trade. I'm not telling you to put this on, but I certainly think I will look at potentially selling naked puts on this particular trade. Again, we are traders, not investors. And I'm going to talk about that at the end as well. All right, looking at the US dollar, just continues in its downtrend of lower lows, lower highs. So the US dollar, right now, maybe it's basing out. Okay, this is kind of what we want to see the markets doing, which is hammer candle, okay, with a bit of a reversal, pretty much a doji on the weekly. So right now the dollar is just in limbo down here overall. All right, let's get back into some of the futures, see if there's any trade opportunities, because we'll be looking to put some trades back on here. Oil. So oil, we did actually put a trade on in oil today. We actually took one off for a more than 100% winner, and we added a new trade. So that's working for us. We're getting back into a zone where maybe Strangles might be the play. However, I'm pretty concerned about putting a strangle on right now with the concerns in the Middle East. But I like the fact that oil volatility is decent. So we've got decent IVR up in the 50s. Oil's come down here. It held this trend line. Okay, over here, it's kind of holding this trend line, getting a nice little bounce here. Good recovery on all the indexes, more than 2 candles, which is what I like to see. So we'll keep an eye on oil. Even though maybe it's a strangle setup, I'm going to avoid that for now. We'll see how things play out in the Middle East over the weekend. I don't want to be short calls over the weekend, but I do want to be potentially into a 112 type of trade here, where I think I get good premium. We can sell fairly low and have a decent trap in case we continue to drift down. So we're into a new one there. If we're looking at bonds, rocketed up beginning of the week. Friday, huge day. Monday, a little bit of follow through, but again, you had the, really the doji type of reversal candle here, and this is the follow through you get the other way. So again, you're looking to break this body to the downside, which we did. 2 days confirms that trend is now down. So we'll see what happens when we get close to the 21. This makes me like bonds even more right now. So I'd like bonds, but I'm less enamored, and some of you will probably note this, knowing how I trade and knowing what we watch for the most part here is I really like the 10-year maybe better. I'm going to move it up here and let's take a quick look at it. Okay, I've gone tasty. All right, so I'm sorry, this is toss. I don't mean to confuse the two. They both have their problems, but all right, you've got a nice move up on the 10-year here. So as the 10-year bond is moving up, again, pull back, nice doji candle like we saw on the 30-year and the pullback. But this is the shorter yield. We're taking advantage of the inversion of the curve here. And I like putting more trades on right now because I think there's going to be, the 10-year is going to be much more sensitive to a rate cut by the Fed. Now, if there's a rate cut by the Fed, you would expect 10-year notes to rise. So that's what we'll be looking at here. This pullback, I think, is giving us another opportunity to get in. We had a quick hit win trade. Oh, what was it? About a week or so ago. Maybe it was last week. I think on this one, if I take a look just to see where that trade is. And we've had a lot of trades. So let's take a, so yeah, it was a 1 day trade where we made 66% on that trade in 1 day. So let's let this thing come down. And then if we come down anywhere close to this trend line or the 21 on the daily, I'm going to get back into ZN as well. So that's where we'll be looking. So ZN and ZB look similar. I like ZN for a little bit more movement with the 10-year. Let's take a look at what's been happening in gold. So gold's really kind of struggled this week overall. Nice big bounce off the 21 today. Had a little bit of an indecision, doji candles here, sell off on Monday with everything else, but finished well off its lows like everything else, but continued to fall Tuesday, Wednesday, and now a pretty good reversal day. We'll keep an eye on it. So I don't love the hanging man style candle here from a bullish standpoint, but what I do like is this thing starting to just chill out and relax a bit. We're not at strangle yet. I think we still have to pull back a little bit more into this volatility zone. If we do not really get into this zone, and we bounced right off of it. So there's some support here. If we bounce off the zone, move higher, we'll continue to go long with things on gold. Now, we do have a strangle already working on gold, and then we also have a 111 trade on gold. I'm going to look to potentially keep the 111 style trade on in gold. If I can get a 112, it would be great. I'd like to see some follow through tomorrow. I don't love the weekly look. It's just kind of blah here. But if you consider this more of a flag or pennant here, it's not really a pennant. It's more of a, not even a bull flag. It's just this consolidation. So I think this is just nice, natural move up here. We did hit some new highs, so I'll move that. So we'll see what happens in gold. No trade currently for me, but I think it's an interesting look. If we take a look at the Aussie dollar, it's been one heck of a week here. This is a gigantic hammer candle here, which is what we're seeing just about everywhere. RSI turning up. We're in a squeeze on the weekly. I think this is very interesting. Pretty good sell-off for 3 weeks. Then some consolidation here. Kind of an ugly overseas reaction on Monday, but then Tuesday, Wednesday, and then a big day today. Really nice for us. We are in this trade right now. I think if you're not in it, I think this is still a very strangleable trade. So I do like strangles in the Aussie dollar. If we're looking at the euro here, nice kind of doji day, week and nothing fantastic, nothing unusual. There's just nothing going on here. So we could reverse lower, we could move higher. So right now we've got the lower move going. It's still something that I would look to potentially strangle. I wanted to see this little rocket chill out here from last Friday and then Monday and then Tuesday, Wednesday, Thursday, just chilling out, coming back to earth. Here, I think you can look at strangles on the euro as well. If we look at the NASDAQ here, this megaphone pattern that we're in to the downside doesn't really bode fantastic for these, but you can see that we came right back down, tagged this line almost exactly, this long-term trend line. I don't know that I can, if we go all the way back here to December 26th of 22, this line has been tested kind of 1, 2, and now 3 times. So I think it's a good, valid trend line. Nice reversal candle. Would not be surprised to see us gaining a little bit on the NASDAQ. So I think 112s potentially are an interesting, or 111s are interesting here. Either way, on the RTY, got spanked, Sunday, Monday, and then Tuesday, Wednesday, Thursday. Some decent recovery here off of this area. Big reversal candle. It's all very, very interesting. You could go either direction, but I think, upper upwards is potentially more of the directional move that we could get into, but we'll see. We're starting to form a little bit of again, an ascending triangle here. So the upside would be where I would be watching for some potential breaks. Can you strangle this? Potentially as well, just to make sure it fits within your plan, if that's what you want to do. And then we'll take a look at live cattle again. Really, this is turning itself into an ascending triangle, but you're really just sideways consolidating overall in here. Pretty good bearish trend on the go. So a little bit of a bearish trend weekly and daily. So not anything I want to do. There's not a triangle trade here. I don't know how far down it goes, so we'll leave this alone for now. And then I don't really see any. I shouldn't say I don't see anything in wheat, because I actually do in wheat see a little bit. It's not really a strangle opportunity yet. I'd like to see a little bit more bounce. But if we're looking at these lows here, nothing's perfect. Okay. But you look at this support level, we bounced off of it really well back here, came all the way back down to this support level. And now let's see if we can hold this. You're in a squeeze on the daily. So daily's in a decent squeeze. Direction might be up. The weekly here is starting to maybe show some signs of reversing itself on this move. So we'll keep an eye on it. I think you're looking to potentially break through this downtrend line. You know, whether it's sideways or up, doesn't really matter. Breaking through that line here is really giving us some setups potentially to move higher. So I think wheat is interesting. And I'm really not a big wheat, and I'm definitely not really a corn guy. I just don't like the fact that acts of God can kill my trades. Although, as we saw on Sunday and Monday into Monday, you know, any kind of acts of volatility can destroy any trades. So there you go. And then just a big day for the big name tech stocks. Apple, pretty good little winner, but still in a downtrend. Okay, so nothing going on Apple. If we look at Microsoft, very significant downtrend. Trying to put some base into it. This is not a bad, it's oversold. So I think Microsoft, not a bad entry here. We are down on Microsoft from about 468 to about 400. So 68 points on this is essentially about 15%, a 15% drawdown. So I think you've got to take a look at, you know, potentially, you know, are there any key levels in here? And if we look sideways here, we can see some support in and amongst this area here. Not perfect, okay, but some decent support, which is exactly where we've bounced off twice. We've bounced off that. We're trying to hold the 21. I think Microsoft is interesting. I'll be looking at that for a trade in the active trader service. If we're looking at Amazon, big gap to fill here. Pretty big down move on Amazon, but I think you've got to take a look at the potential of filling this gap. So again, I think there's some stuff, you know, some trades to be had. Pretty good update on Meta. Meta looks super good. Okay, from most standpoints, it's nicely above its 50 and 21, moving higher, bullish PSAR, MACD rising, RSI rising, in a squeeze, firing to the upside. Meta looks good, and it had a great day today, up 4%. So there's where we are. And then I'm skipping, you know, Google, I think it's just struggling down here. It's not showing me after breaking the downside of this. We knew it was heading lower. Now we're just going to look to see, can this thing, you know, break through its downtrend? Right now, doesn't look great, but you're getting some reversals in here We need to see if we get any follow through or some sideways action. And then let's look at NVIDIA. Trying to hold the 618 here, right here at 100. It's just consolidating, heading into earnings, but earnings are still a couple of weeks away. This is not a bad spot, in my opinion, for potentially selling some leaps or something here. And then Tesla, it's also starting to base out a bit here. I think there could be some more downside overall, but I think you have to kind of watch these areas on Tesla and see what happens. But really, there's no trend yet except down. All right, and then I wanted to get into one more stock, which we put on today. And what's been performing well, obviously some defensive names. And I'm going to move Merck up into where all of the rest of them are. No, this is not the most efficient way to do it, folks. I get it. All right, so Lilly, fantastic day today. Giant gap today on Lilly. Earnings stellar. So this was the opportunity of opportunities, was to sell something on Lilly. Okay, but you had to really probably wait till earnings. Let's see how the follow through is. But let's look at Merck as well. So you've got Amgen holding in there pretty well. And Merck has just taken a real beating since earnings. So when earnings came out, earnings were good. So earnings are fine. Okay. But obviously it sold off after earnings, became very oversold here. And now you're seeing MACD starting to turn up, coming off of oversold on the RSI. Let's actually add the 50 line here. Oops, why didn't it not hold? Okay. And let me just tweak it a fraction here. Get it to exactly 50. All right, so let's take a quick look here. I think the bounce here, starting to get some momentum. All the momentum has definitely been down, definitely bearish trend here on the weekly, but I like the candle, the reversal potential candle here. I like the fact that this was past the 3 ATR, okay, and it stayed there, okay, and now it's starting to come back in line with everything starting to move up. I just think it's overdone to an extent here, so we actually went with a leap and a call, short call on that, so a poor man's covered call. We actually added that on Merck, but I think you could look at doing something similar for some of these others, and boy, AbbVie is just looking fantastic. Okay, so several of these stocks that we follow. Pfizer, I think, is not a bad area. Abbott, not a bad area. J&J looks good. So there's J&J is right back now at this trend line, which is also very interesting to take a look at. All right, so there's where we are on a handful of futures and stocks. Let's take a quick look at the portfolio, and then we'll look at some individual plays as well. All right, so let's get into the portfolio. We ended the day today 382 on Delta, so pretty nicely, neutral on Delta. Theta is low because we obviously closed out of some positions, so we need to get that theta moving back up. We also have volatility coming out. So theta is where we need to add, but we're just going to be smart and add back slowly. Okay, theta is at 0.28, so it's okay. We picked up over the last couple days. We have improved almost 70,000, 60 to 70,000 of net lick has reversed already on it. So from a low of the 278 back to 334. So obviously we're down, but we are definitely recovering. Here, we're not adding any funds to this account at all. We're just letting the trades we have on just start to recover and reverse themselves. So a lot of the naked puts, got volatility dropping, the market moving up, great for the naked puts. We picked up about 10 grand, or the first day about 50 grand by Tuesday. Yesterday, just a fractionally little bit more, like an extra 1,000. And today we bumped up another 10 grand in the account on the session. BP usage obviously is down without some of the trades on. We had to close our bill account just to give us some room. We'll get that back on and running now that we're back in the swing of things. We'll get bill cranking back up. It's early in the month. We should have gotten our distribution today. Didn't even look, but we'll see what happens with that. And then our buying power now at 37%. Without bill. So we're ready to get some stuff back on. Of course, we took the losses on Monday, but then we have recovered nicely. Good wins on Monday, Tuesday, and then some more wins today. So we're back in the swing, making some trades. We're down about 20%, which is fine. We will get that back. So we're down about 20%. That's our goal. Get that back in a few months here. We'll keep doing it. And we're going to stick to most of the plan pretty well as we go. Let's take a look at some of the losses here, or wins here for the week losses. So as I'm looking at, I don't know why I have this line on here. Let's remove it. Okay. But let's look at what's happened this week so far. So on today, what did we do today? So today we had a oil. Not only did we close the naked puts on this oil 112, we also closed the put debit spread for not really a winner, but we recovered a decent amount of the initial spend on it. So overall, 110% because we recovered some of that put debit spread. So 115% or so on this particular trade all told. So good day today, closing both of those. And then we also did a 0 DTE trade today. We sold a call credit spread up at the 53.65 in the morning, and we were in for 75 cents. We were out for 35 cents about an hour and a half later. So that puts us at a nice 53% gain on that. So book some gains here today. Yesterday also, we closed a oil put debit spread here for a winner. So we picked up another $1,000 on a put debit spread that was remaining. We'd already closed the naked puts for, I believe, a loss on those. And then we took a gain on the put debit spread. So overall, there's where we are. We're down a bit right now, so we got some work to do. But being down 19, 20%, here at the end of the craziest week we have ever seen, not the worst thing. So we'll, we'd like to be better, but we're improving the trades that we have on. And then let's just take one quick look at the portfolio. As you can see here, P&L on the day up about 10 grand more. So we're really putting this thing back together. After a crazy, wild, once-in-a-lifetime event on Sunday. Now, it's once in a lifetime so far. Can it happen again? Absolutely. We'll be prepared this next time. So we're in the Aussie dollar right now. This is a strangle. It's up 20%. So that thing's fine. Oil did put on a new trade today. It's up 7% already today. ES, we're still sitting in our hedge. Now, most of our hedge has been just losing, as our hedge at one point was up a lot of money. So we were up 30,000+ just on this hedge alone, and now it's back to $500. But that's fine. Hedge is here to protect the account, which it did to a large extent, not completely. We still have some put debit spreads floating around. We're down here. We have long-term 112 on. This thing is pretty much a break-even naked put. There, XL 112, it's down about 8%. Here on the naked put, it's fine. We ignore, because these have been adjusted, none of these tasty P&Ls are correct. Okay, as you can see here by looking at the trade, you can see that those aren't correct. We've actually, if we closed it right now, we'd actually have a winner on this put debit spread. Another long-term 112, this thing is still cranking along in good shape. Well, I don't know, good shape, it's only down 79%. Here's a leftover 112, or I'm sorry, put debit spread, leftover put debit spread, leftover put debit spread. naked puts here, they're still up around that 200. So they'll take a little bit of time for these things to recover, but they certainly have done a good job, up nicely today. We're going to leave those on because still fits within our plan. Okay, so we're not stopping on them at all. And if we need to, we'll roll those things out. Put debit spread. We got a little hedge in here. There's a reason for this small hedge. I'm going to leave this on, giving us a little protection right now. We'll see what happens. All right, so what we did here today was we took the put debit spread that we had remaining and we added back naked puts, turned it into a 1-1-1 trade. So we did buy, or sell, I should say, naked puts. So this trade is now back to full. We still have this 1-1-1 trade still working. It's a nice 100 wide on the put debit spread, which is still up nicely right now. And the naked puts are, they're down, but they're okay. They're certainly manageable. And then we have another put debit spread here working. Let's take a quick look at gold. We got a strangle on gold. It's up just 1%. So this gold strangle is just hanging in there. This gold 1-1-1 trade is at 64% profit. And then we just have the put debit spread left. We'd already taken the bond naked puts off. So that's what's there. And then TLT, we're just sitting on a small winner on this. So this is where we are in the main account, which is fine. It's all good. We'll take that for what it's worth on this week. So good recovery. We're up 60, 70, some odd thousand since Monday, just on the net lick alone as the trades recover. And we are making some tweaks to the trading plan, but we're not scrapping it. We're not going to scrap trades that have paid off for years and years and years on one event that is the singular most volatile one-day event ever. We did have hedges on. What we didn't have was enough hedges, and I will say it's mostly user error. I'm not going to blame the strategy. It's user error. Number one, I didn't stop out when I had some opportunities on Friday and Sunday at around a 2x loss, number one. Number two, I didn't have enough hedge on for volatility, which we'll take care of that. And then number three, I didn't really follow my plan exactly. And part of my plan is, as long as we have the buying power, we'll hang in there and potentially roll out. And instead, I bailed too early on some trades, took some bigger losses than I wanted to, but we'll rectify that stuff going forward. So, and probably the main change for me is I love the 1-1-2, and we're going to keep trading that in many areas, but I am going to probably move closer to a 1-1-1 trade, which is going to cut my Vega exposure necessarily in half. It's going to cut my risk in half on the naked puts. I've got a good little tweak to the plan too to increase the income that comes off of those. So we're going to reduce risk. We'll add a little bit more hedging, a little bit. We don't need a ton more because we're going to cut our risk in half. And as we get rid of some of these other naked put trades, we'll have reduced risk. So lesson learned for me, traded just a little too big, but we had some members in our group doing fantastic. We've got some people that are up this week nicely. We've had some that are down decently. And then we've had some that are kind of just neutral right now because they may have managed things a little bit better. Okay, they stuck to the plan, which I didn't do as good a job of as some of the members did, though. They were smarter, got out at the 2x loss, got out when they should have, and they had better hedges on than I did. We cover hedging very deeply in the Discord for our members, and many of them heeded that, took those hedges. Some were up nicely on Sunday night when all the rest of us were down because they did things the right way, and I didn't really heed my own warnings where I called for a market sell-off back on the 16th, but yet I didn't lighten up my positions, which is what I should have done. So again, all user error, it's all my fault. Okay, I take full responsibility for all of my errors in trading. I'm not blaming anything else. I'm not blaming a market or volatility or some event or anything. It's all me because had I really followed the plan better, which I didn't, okay, and got out at the right times and had a little bit more hedging on, which I knew I should have, and lightened up on some of the naked puts I had. I think I'd be sitting pretty good right now. So instead of being down 20% right now for the year, I would be probably back to even, or a little bit above that. So I'd still be at a profit, but we'll get it turned around. I appreciate all the members, some great comments from some of you out there who hedged properly, kept things in perspective, traded through this. Got a great email today from one of the viewers on how grateful he was, followed the plans, and is doing very well. Okay, I just got to follow my own advice, got to follow my own plan, size properly, and keep things under control. But we will be back, and we'll keep trading here. We're not going anywhere, so I'm not bailing out. I'm not scrapping anything. Okay, it's a loss, down 20%. We'll get that fixed. Okay, so we've had years where we've been up 30, 40, 80%. Okay, and it's only August. Okay, so we got time. We'll make a nice recovery here. We'll get back, be a little smarter, and we'll be back at it. You guys have a great rest of your evening. We'll see you tomorrow. Bye-bye.